for the details over there. Well, we were highlighting the Dabur numbers that came in. Numbers are more or less in line with the estimates. The revenue is up about 11% year on year. EBITDA is up about 11.2%. Margins a little flat at 19.3. The volume growth, Mangalam tells us, has just come in. The volume growth number is around 3%. I think the street was hoping to get about 5%. So that could be a mild miss on volumes, if you could call it that. Mohit Malhotra, Chief Executive Officer at Dabur, is with us to talk about the performance and the outlook, more importantly, going ahead. Thanks very much for joining in, Mr. Malhotra. So let's talk about volumes first. As I said, I think Mangalam was telling us the street was working with 5%. You've done 3%. What's the outlook, and what's the ground level feel you're getting when it comes to demand?
Hi, Reema. Thank you for having me. So I think overall we are pretty positive about the results. So I think if you look at beverage, got impacted because of the unseasonal rains this time. That's why the volume growth is a little lower. If you look at ex-beverage, our volume growth, that is around 6%. And that was the results. So only the beverage portfolio didn't perform. Otherwise, our healthcare portfolio grew by around 11%. Our HPC portfolio also grew by around 11%. Foods, as a matter of fact, grew by around 35% for us. Beverage portfolio was kind of flat for the business. But for that, India business did well. So going forward, we expect with the monsoons being near normal, now rural should trend up. And on back of rural, volume should also pick up in addition to the price increase-based growth. So we feel it should be far better. Our international business volume growth was around 6%. Consolidated, if you look at volume growth, will be in the range of 6% for the whole business, which is India and international, ex-food 6%. And with foods, India business is 3% volume growth.
Mohit, what according to you is the reason for the softness in the beverage business this quarter?
It was monsoon, basically. So I think all the beverage companies you see are down by around 25%. As compared to that, Dabur actually performed much better with the market share gains actually having here. And our business was kind of flat in beverages. Monsoon and out-of-home consumption got impacted a bit.
Okay, got that. What's the outlook on margins? In the current quarter, you've clocked in margins of about 19.3%. Your earlier guidance was that margins will be in the band of 19 to 19.5%. Do you maintain that, or are you continuing to see a downward trend in raw material which could push up margins?
Yeah, so margins will sequentially actually move up for us. If you look at last quarter to the current quarter, last quarter our margins was around 15. Now the margins are around 19. We maintain our guidance to the margins being around 19.5. The margins would have been better, but for our investment in media, we've invested around 30% is the media growth. So we've invested quite a bit on television advertising to surge the demand up, but margins will inch up because we find deflation kind of picking up. In India, business inflation in the current quarter was around 0.5%. Going forward, we will see deflation going up for us, and the margins will consecutively actually improve.
So, Mr. Malhotra, your earlier guided range for margins for the year as a whole was, I think, around 19.5%. Are you still in that band, or could it get even better?
It could get even better, so it will move up from 19.5, depending upon how the inflation environment actually pans out for us. If you look at last quarter, we didn't expect the inflation of foods to be around 11%, but it has been 11%. The basket of inflation is kind of changing. For us, spices inflation is also pretty high, but the hydrocarbon-linked inflation has actually come down drastically. So it could be a little better than 19.5.
Mohit, in terms of volume growth, will we see some pickup through the rest of the year?
I told you volume growth primarily got impacted by the beverage business because of the monsoon, and beverage happens to be very high in saliency in the first quarter. As we move forward in the other quarters, the salience of beverage will actually reduce, and HPC and the HC will be higher, and therefore that will help shore up our volume growth also going forward.
So what kind of numbers then should we expect?
No, it's very difficult, Prashant, to give you the exact number. But
not exactly. Just a ballpark.
Would you be any indication?
Yeah.
I'll give you the business. I'll give you the understanding of the business which did not get impacted. For example,
Right.
our healthcare business, which grew by 11%, had a volume uptick of around 5 to 6%. HPC business, which grew by around 12%, had a volume growth of something like around 8% odd. And those businesses did well and were not impacted by the season. Now, exact number is very difficult for me to actually give you a guidance for. But definitely it will be much better than 3% going forward.
Mohit, just to deviate a bit away from the numbers, there was this media article about, carcinogens in your honey product, in Dabur honey. Would you like to comment on that?
Yeah. So we stand by the purity of Dabur honey. We are the largest market leader, not just in India, but in the world. We export to around 100-odd countries, and we conform with regulations of every country in the world, including FSSAI, which is a regulatory body in India. And every single batch of our honey dispatched from a factory premises complies to FSSAI parameters, including HMF, which has been talked in the article. The article is completely baseless, without any scientific evidence, and it has absolutely no legal or any merit in the substance on where the research, which analytical lab it is. And I must tell you that Dabur honey is India's largest honey and world's largest honey, and recently got the Egg Mark special certification that we've got. This certifies the purity of Dabur honey. And we are the only Indian honey brand that is packed in US FDA certified facilities in India. Those have been inspected multiple times by FSSAI authorities, etc. So this is obviously planted in a motivated article, and it's coming right in time, a couple of hours before the board meeting. So I don't need to talk more about it. Thank you.
Okay, but good that you're putting the clarification on board, Mr. Malhotra. So you're confirming that no other certification agency or the FSSAI, none of the government regulatory agencies have reached out to you in this regard?
No, not really. No, not at all. Absolutely not at all.
Okay. All right. Take that on board. So finally, to wrap things up, to get back to the business, we've discussed overall margin outlook, which would be better than your earlier guidance. And once beverages pick up, you're talking about overall growth. If we talk about categories or segments, we have 3 more quarters to go in this year. Which ones do you think would be firing the most for you? I mean, foods, or would it be some of the other segments?
See, we want to gain market shares across the business segments that we are present in, and we should be growing ahead of the category growth rates in all the 3 categories, whether it's HPC, HC, and foods. But like the rural business is kind of trending, I expect the HPC portfolio to fire the most, followed by our healthcare portfolio and followed by the foods portfolio, which are all margin accretive to our last year baseline. So HPC followed by healthcare, followed by foods.
Okay. All right. We'll leave it on that note. Thank you very much for joining in and giving us a perspective on the business. That is Dabur, talking about growth trends and also dismissing those reports that were suggesting or alleging that there's perhaps some kind of failure of tests with respect to Dabur honey stocks, about 2% lower. We'll take a quick break on that note. On the other side, we'll have Anshu Sehgal as well as Devan Choksi joining in on the market perspective.